Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me here today. We're going to do something a little bit different today. We're actually going to do a little bit of a deep dive into a stock that has been very easy to trade recently. And yesterday it had a setup that it was a pullback in a strong longer term bullish order flow. And what we were looking to do today was find a spot to buy and then initiate a new swing trade. That's the key I want to mention here. We'll initiate a swing trade. It can be very easy for active traders, especially those that are a little bit new to the markets, to mix day trading and swing trading scenarios. So what we're going to do, and we're going to go not so much bar by bar, but scenario by scenario, looking at the stock, looking at the market, looking at the situations. And I want to just kind of give you as much as I can of the thought process of going through a trade, because day trading could be very different from somebody who has only done swing trading. My lighting is kind of really bad here. So I want to make it clear. We're starting out first with discussing, we're looking for a swing trade. We're looking for a stock that we are looking to hold and retest the previous high that it just came from. So that alone sets up your mindset to say, okay, I'm not going to be managing this on the micro time frames to look for this longer term position. That has to be a part of it. So that means that as the stock is pulling back, which is against the longer term order flow, because it's a pullback and you're not buying a breakout in the direction that it's going now, and I have the perfect chart to illustrate this, you're going to manage the trade differently. And that means that you're going to have less shares while the stock is going down, looking for a spot that you believe that the pullback has stopped, and then start building that position as it starts to move back in your favor. So it's kind of an interesting position where we have what's called time frame conflict. And time frame conflict essentially means that the longer time frame where the stock has been being pushed in one direction, in this case for almost a year, but the recent price action is a little less obvious. But last week and the prior, let's say the prior 8 days to the sell-off, we had basically a $40 rally. So we had a really long-term bullish move. The last few weeks have been a little choppy. The last prior 8 days had a really strong rally. The last 3 days, or 2 days in this case, pulled back. Yesterday was the third day. And now you have all of this thing going on. And it can be a little bit like, which of those pieces do I look at? But that's what's so exciting about trading. And that's also the challenge of trading. The way that we described it, we had our coaching call last night. The way that we described it is that you could be driving on the road today and nobody's on the road and you're doing 85 or whatever's fast for you. Fast for me is 65. But then tomorrow you're on the same road and it's stop and go traffic, but you're still trying to drive yesterday's traffic. And that's where the problem is. The problem is you're not straight up anymore right now in the chart example. Now you're pulling back and you're looking for a spot to step on the gas, but you're not there yet. So you kind of have to pull at feelers. You have to go along a little bit slower until the road opens up and you feel comfortable. I call that getting feedback from the market. Jesse Livermore says you were probing for the market to look for entries. When you find your entries, you send out a probe and you get feedback from the market. My friend Mark used to call that tier one trading. You're putting on your tier one, then you add your tier two. Now, depending on how far and how fast you expect that stock to move, more how far, not necessarily how fast, that's going to dictate when and if you add to the trade. So a swing trade's a lot easier to envision. A stock can go up for the next 5 days versus a day trade where sometimes it can be hard to imagine a stock going more than what it normally does, and maybe even adding to that position doesn't make sense. So we got a lot to unwrap in here, and this is actually a really good example because it was super strong, got choppy, went up strong, and then pulled back for 3 days, and during the pullback, we're looking for a spot to enter. So if you're a day trader or even a swing trader and you find these videos helpful, absolutely click down and subscribe. Subscribe to the channel because we're going to produce a lot of this on a daily basis. Every day is 2 videos. And if you want to trade with me in real time over the next 30 days, definitely click down and learn about the boot camp. See how other traders are doing in the boot camp, and it kind of validates everything that we're talking about right now. Doesn't matter if I could do it. I want to be able to show you to do it. So we're going to head over to the charts right now. And this stock in particular yesterday is kind of a hot button for everybody in our community. So I want to walk through it. And when I say hot button, it's because the stock, you can see here on the monthly chart, which is Docusign, has just been absolutely on fire for, I think it's a better part of a year. But now we've actually accelerated to the upside, and accelerating parabolic type moves typically lead to the end of a move. So let's just put that in classic technical analysis. So what we have here, and again, if you've probably heard me walk through this, that's perfect, that's perfect, that's perfect. And now you have to start saying to yourself, what do I want to see? I want to see perfect again. But this is what we have so far this month. It's less than perfect in August. It's still well bid, which means higher highs and higher lows, but it's less than perfect. So now we go over to the weekly chart, and you can see that we're not in a downtrend. So if we drew a trend line, you can see that we are still kind of way extended, right? This would actually be where the trend line would end up changing if we actually did have a change of trend. If we wanted to, we can draw a little bit more dramatic and start where it went parabolic. Even still, it's still pretty strong. So by no stretch of the imagination has this stock turned around. As a matter of fact, maybe you can make a case that it's in what we call a potential change of trend. So we still definitely want to be long the stock. It's long here, it's a buy here. It's not a sell short here at all. It's not heading down at all. It's a potential change of trend zone. But now we go down to this movement here, which is essentially, let's call it from July 24th through August 4th. So the stock basically went from a low of, let's say, 187 to around 226. A $50 move, a $40 move. I'm sorry, what was that number? 187 to 220, so $40. So $40, now you're like, gosh, this stock, I just knocked over the microphone there. The stock was super strong, and now you're like, okay, when this stock gives me a chance and it either pauses or pulls back, I'm gonna look for the next bid. So this is kind of what's in your mind. This is what's in your mind. This is what's in your mind as a stock to buy. This is kind of in the background because it's not a change of trend yet. It's not pulling back. It's a potential change of trend. So potential means we're still looking for a long. So I'm going into the day saying I'm looking to be a buyer. So the stock yesterday, so this is what we were looking at yesterday on the daily chart. That's the pullback. So the game plan that I had yesterday was I was looking to buy a lower opening in the stock to retest $200, which was basically the low, give or take 50 cents maybe. So the close of the previous day and the stock being well offered had me thinking, okay, right now the stock is going down in the direction, but longer term, the direction is still bullish. So I'm only looking for a spot to buy. So remember what I said before about bidding into a stock that's going down. And I think this is just the absolute perfect chart to illustrate what I'm talking about. This scenario here where the stock is still going up and you're buying strength, you can be a little bit more aggressive on your entries, whether it's a day trading entry or a swing trading entry. This pullback and well offered is trading against this higher time frame, but you're still trading with this higher time frame. So remember what I said before about driving open road versus driving stop and go traffic. When this is pulling back, this is kind of stop and go traffic. You're still looking to go in the same direction. You're still confident in the direction, but you need to step on the gas, take off the brake, step on the gas, and that kind of thing until the road clears up and turns around, kind of like what we saw here. So all of that into the consideration for the day. We also need to consider what's going on in the market. Not as significant because we're trading the stock, but I always watch the market all day, every day. So at this point, the market is still going higher. We're in the midst of a 7-week rally. So in the back of our mind, the market's still strong. So the market has not turned around. So that's going to add a little bit to our conviction level. So we're putting the pieces together. This is why we call it building an argument for a trade. So now we're going into the day and we're saying, okay, $200 on a push lower, a test of yesterday's low is the first spot that I'm looking to bid for support. That's the first area while I'm in stop and go traffic that I'm going to look for a spot to put my first probe out into the market. And here's the problem that I saw with a lot of traders yesterday in the community. And when I say problem, it's just a deeper insight. It's a distinction that you need to make. Have that in mind. Are you buying strength in the direction or are you buying weakness in that direction? Same trade, same direction, different scenario. That's the deeper instincts. That's building the argument that I talk about. That's why you want to be in the tape reading room day in and day out while we build these arguments together. So now we go into what the stock was actually doing on an intraday basis. So I'm actually going to zoom this out so it's just one 5-minute chart because we kind of broke that down now. So here's the day, and we're going to actually draw a trend line at 200, which is the price that I was looking to start buying. So which was essentially the previous day's low, but I used 200 because round numbers, that's usually the number. So I was looking for the stock. So before the market even opened, based on everything we just explained, I was looking for the stock to open lower and test the previous day's low, which you can see here was actually a little bit lower than 200, but 200 was where my alert was set and I was starting to look for an entry. So as we got down to 200, I'll just zoom this out a little bit. The first entry that we got was when the stock started to pause here. Now, this is going to be on YouTube, so I'm not going to get specific to the entries that we talk about inside the boot camp and inside the order flow masterclass, but I do want to talk about the pause that happened here. So I'm looking for it to stop and hold down here. It blows through my stop, it goes through my area that I was looking for. So now I'm, okay, not yet, not yet. Now remember, the stop and go traffic, it's pushing against me. I'm not looking to enter the trade yet until I have a little bit of confirmation. The very first confirmation would be that stock pausing and no longer going down. So now we have another part of the equation, okay? When the stock pauses, the next natural question is, when do I start getting into this position? Very simple, right? So here the stock started to pause. Now, do you buy the first time the stock blips up? And if you're not a day trader, this is probably going to be like, what are you talking about, a 5-minute chart? But this is a way that a lot of people make a really good living. So now you're here, right? You're like, okay, do I step on the gas when it moves in my favor a little bit and starts approaching 200 again? Or do I put out a probe? Because if the probe comes back and says, nope, not yet, you're going to get hurt with a little bit of shares because you're in stop and go traffic. You're not stepping on the gas. It's not going up right now over the last couple of days or even right now. So if you put on a probe or if you actually got a little aggressive before it got over 200 and it continues to pull back, well, the stop loss here would have been below today's low if it was a day trade. But this is not a day trade. Remember what we talked about all the way at the beginning of the video. We said we're going to start building a position, looking for that stock to bounce and start to retest and hopefully retest that somewhere in that $40 move. So you can't be risking $1 here if you're looking to make 40. So now you have to put your first probe out, if you even put it on, which in this case, it did not trade above the target that we had. So there's really no reason to put the probe on yet because it didn't start moving in our direction. There's not enough proof that the stock is moving in our direction. So now we actually push down. And if you remember here at this same time in the market, which is another part of the equation, the market got crushed. The market just got absolutely shellacked between, let's say, 10:30 and 11 o'clock. So let's go back to our stock. So you can't trade in a vacuum. You need to be watching what the market's doing as well. So in this window here, when we're considering getting long, or even on this one little candle here, the market is now getting destroyed. The market is just getting hammered. You can't trade in a vacuum. You can't just look at the end of the hood of your car and say you want to drive. You have to look at everything else that's going on. So now we finally push down and we have our first rally. And whether or not you had your first probe on or not, we have some sort of proof now that we might be bottoming out because we bottomed, pushed back up. But here's what I'm thinking now. I couldn't get through where I got stuck last time. And I'm not above 200, which was my original target of where I wanted to start building a position. But at least we have some proof, some feedback from the market saying, you know what, Pete, sit up in your chair. There might be something going on here. Maybe we're going to start slowly turning around here. Some buying came in. Let's say, for argument's sake, you got in early again. You did not wait for it to get above the level that was your target, and you got in early again. Well, first, let's think through. Why would you get in here? Because it's still going down, and you couldn't get through where you couldn't get through before. How does that make any sense? Where is there more validity? It's nothing more than the road opened up a little bit. You're like, I'm going to step on the gas. Not yet. We still don't have enough proof from the market. We want to see proof that either the buyers came back strong and took out a level that matters to us, or the selling was done in that shorter window for us to start initiating a position. So how do we know that happens? Well, we pull all the way back, and now we form the most simple chart pattern on the planet, which is a double bottom. We take out the lows by a little bit. So now we're sitting up in our seat and saying, you know what? Maybe this time it's different. Maybe now after 3 days, the stock has finally started to bottom out and we could start looking to build a position. So that was the 3rd day down. So in that case, this scenario here would be the first place where you have a little bit of proof to say, if I start building my swing trade, not my day trade, my swing trade, and a lot of people lost context of that yesterday as well, because of these short 5-minute blips and 20-minute blips. This was a swing trade, and you were managing it as a day trade, which is wrong to do. You have to manage your risk, your share size, and your intention and your objective for the goal on the higher time frames. These shorter time frames are doing nothing more than fine-tuning your entries. But if you think about everything that I just said, if you can visualize open road versus stop and go traffic, if you can visualize that period where it went up $40 and you were buying strength and have a little more confidence versus now you're buying weakness and you need to work the order, it just makes perfect sense. But all you have to do is look at that daily chart and say, is it going down right now in the daily chart or is it going up? Am I buying strength or am I buying weakness? That's going to be 2 completely different roads that you're on. It's 2 different driving experiences. It's not yesterday anymore. It's not a week ago. So the first bit of proof that we have is here. Now, the obvious question, well, you don't know that. It just broke through support. Well, we do know that because the next 20 minutes to a half an hour, we actually bounced pretty hard off that support and you can start to feel a little bit more comfortable. So in this case here, whether you decided to put your first probe out here, your first position, what I call my feedback probe, right? Or you actually wait for it to get back above 200. Now, the problem with waiting until 200, and problem is relative, is now you're talking about 200 down to 193. You have a $7 window here. So this is where good trading, making those distinctions really comes into play. Because you knew you wanted to come in. You knew you were waiting for feedback. Up until this whole time here around noon, you didn't have feedback enough to say the selling over the last 3 days appears to be stopped. How do you know? Because you punched through the lows and you didn't stay there anymore. So in this area here, you had every reason in the world, and we actually had 2 of our favorite entries down here, which I'm not going to talk about right now, at the support level. So worst case scenario, if you're nervous Nancy and you're looking for a great trade, and not speaking to Nancy in our community, just nervous Nancy has nice alliteration, you could have started to look here, because when you punch down, bottomed out, and what is the market now doing at 12:30? The market now at 12:30 is back above the open. So let's compare what's going on here now. The market is now back above the opening price, back above a level that matters to us as tape readers. And now at 12:30, the stock forms a double bottom, fails to break down, and actually starts to find some support. So this technically, as the day was unfolding, was really the first place where if you put on a probe, you had some validity, you had some proof, you had some feedback from the market, where the market got smashed, rallied all the way back up to positive from the open, where now the daily candlestick in the SPY is now green, and you have a double bottom in the stock. And now you can start looking to put on the first piece of your swing trade where the market's above the open. You have proof there. You have a double bottom here. You have a super defined risk point, and you have a $7 better entry than somebody who kept waiting and waiting and waiting and waiting and waiting until it got all the way back up to the high. So there's 2 different entry scenarios there where you could have waited for that proof at 12:30 and said, I'm going to wait for it to get all the way above 200 again. But the scenario changed even from 12:30 to 9:30 in the morning. So over that 3-hour window, there was a lot of price action that happened. The stock sold off, traded through our price, went down, didn't hold. The market got crushed. The market rallied. Your stock has a double bottom. Now you have to sit up in your seat because you're cycling back to the stock, cycling back to the stock. You're not going to miss a good entry in your stock, which in this case is a swing trade. And now you sit up in your seat and you say, the market just exploded. The stock has a good risk point with a double bottom. If I get an entry signal here, this is probably the stock right now for me to start putting on this entry. So a lot goes into, that's just one trade. And we really didn't even talk about other stocks in the industry, what's going on in the whole market at the time, what's NASDAQ doing at that time. That's what goes into trading. That's why we need to be trading together every day. That's why people in the community, I'm like, ask questions, call out your trades. I want you to Get out of your head what's going on. We walked through this and we said 200 before the market opened, looking for a lower opening. Didn't hold 200. The market got crushed. You're not going to buy that first little blip. Pushes down. Now you have an argument. Now you build that argument to say, now we have a little bit of proof. The market got crushed. The market bottomed out. The market rallied. The stock has a double bottom. This is the low of the day after 3 days. I was looking to buy a lower opening. This is probably the spot to put out my first probe to see if we get some support. There's a lot going on, but you know what? That's the upside of professional trading. That's the upside of being in the stock market and looking at these setups and saying, I know what I'm looking at. And as I learn to put these pieces together, I keep myself out of harm's way. I have lower risk. When the situation is good but not great, I'll put out smaller pieces until it starts to work out. And when it does, then I can start building a position. Then hopefully that candle goes from this to this. It goes from well offered to well bid on the daily candlestick. So now I'm not buying weakness anymore. Those are my first probes. And now the market reestablished itself. And now I'm buying strength again. And I can have a little bit more conviction, and I can sit back and feel a little better looking for a retest of that previous level. I know that's a lot. But watch this video a few times, because that's really what it takes to make the market make you money. And it's really fun when you start to put the pieces together. If you find this video helpful, definitely click down and subscribe, because I produce stuff like this every day. If you want to trade with me personally over the next 30 days, click down and get in the boot camp. It's such a tiny investment and worth every penny. Thank you, everybody. I'll speak to you soon.